Stocks take a tumble as fears of recession grow. Welcome to Faith Nation. I'm Jenna Browder.
And I'm John Jessup. Well, if an actual alarm bell existed to signal a recession, many economists say it would be ringing tonight.
In a healthy economy, long-term interest rates are higher than short-term rates. But when short-term rates rise above long-term rates, it's called an inverted yield curve. And that is what's happening right now. In the past, this has been followed by a recession within several months to 2 years. And for President Trump, this could spell trouble.
That's right. He's long touted the economy as the highlight of his administration. And the vice president's chief of staff tells Faith Nation the White House doesn't expect that to change.
It's been a pretty dynamic economy under Donald Trump, from both the regulatory impact as well as tax relief that we've provided. We believe that that the economy is strong. We believe it's going to remain strong. So we're not anticipating a recession.
Stephen Moore is a former economic advisor to President Trump and currently a distinguished visiting fellow at the Heritage Foundation. And he joins us now for more. Stephen, thanks for being with us.
So great to be with you.
Steve, stocks fell today because investors are worried that the bond market is signaling a recession. Well, what do you think? Is a recession on the way?
No, I don't think so, but there's no question the economy has slowed down. You know, we were growing at 3 to 3.5% last year, and now we're growing at about 2%. And that's a result, I think, then of two things. Number one, the ongoing trade war with China and the uncertainty that has created. And the second factor has been the Fed, which, in my opinion and Donald Trump's opinion, has been way too tight. And when you have the interest rates this low and the inverted yield curve, that's a sign of Fed being way too tight with money, and that needs to be reversed.
So does this put pressure on the Fed to act?
You better believe it does. And they ought to, you know, I've been arguing they should act tomorrow. I mean, there's no reason to wait, Ben, for their next meeting, which is in the middle of September. Given the fact that we are in a precarious financial situation right now, I believe the Fed should act immediately to cut rates by 50 basis points to infuse more dollar liquidity into the economy. You know, if you look at what's happened across the pond in Germany, you know, Germany now has negative real interest rates, and that does, you know, presage a potential, recession in Germany. We don't want to go down that path, and the Fed should act proactively to make sure that doesn't happen.
Stephen, you alluded to this earlier, but what about critics who say the president's trade war with China is what's causing or potentially causing recession?
Well, certainly the trade war is hurting growth. Now, I happen to agree with what the president's doing. I think every day we see China as a worse actor on the political and foreign policy and economic scene. And, you know, we're now facing the possibility of Chinese troops, going into Hong Kong to suppress these freedom fighters there. So, you know, you see their bad behavior when it comes to the economy, the fact that they're stealing our intellectual property and they have not opened up their markets. And then you see the cyber security threats that they pose to the United States. And then you see their buildup in the military. You know, I'm glad that we have a president that's really standing up to Beijing. And I view that as a kind of short-term pain for a longer-term gain. So, yeah, has it hurt the economy? Yes, but better to fight China back on China now than wait 5 or 10 years.
So what does this do to the president's chances of re-election, since the economy has been one of the biggest achievements? How would a recession, I know you said that you don't think it's going to happen, but if it did happen, how might that hurt him in 2020?
I think his major campaign thrust has been to talk about how he has rebuilt the American economy in an incredibly impressive way. We have the lowest inflation rate, the lowest unemployment rate, and the lowest interest rates in 50 years. So that's a beautiful picture with rising wages. So he does need the strong economy. I happen to think there will be a deal that gets done in the next 6 months with China. And when that happens, I think the stock market and the real economy springs back to life in a very powerful way. So there's a real incentive to get a deal done that both countries can live by. And by the way, it will make both countries' economies perform much better.
All right, we're going to end on a positive note. Stephen Moore, thank you so much for your time.
Thank you.